What's going on, believers? It's your boy Rebalance with a live price action example today. I'm just going to briefly show you so far. So the time is currently 8:11 a.m. Eastern time. So 40 minutes ago, we did have a high impact news release into the market. You can pause the video and read through this if you want to. Just want to click that open so you can see. All right. Then we'll get into the charts. And so I'll explain this first part here, but once I switch over to my New York session model template or layout, that part I'm going to fast forward through it, like speed it up. So I'll go back and edit this video and I'll speak over it, just kind of what was going on through my head and things like that. As I was doing my live markups, I'm not gonna really explain everything in full detail. Some of this stuff at this point took years to really be able to understand. And so I hope that you can understand why I'm not just willing to, share all of my insights. But so for the dollar chart, you know how it is, right? As far as how I mark up my charts, over here on the left, hourly, over here on the right, daily. Now, I mentioned something about perfection not being something that someone that's new to this business would easily find. And so I do want to just show you an example of perfection really quick. So over here on the right, you see this yellow rectangle, right? That's stretched out that we rejected from once. And what I want to show you here is when I click it, it shows the high and low value of that range, right? So 102.752 is a low end of that range. What I want you to watch here is up on the left, this high of the candle that I'm about to hover over. So right here, that high 102.752, that's perfect. Literally right to the exact point of the low of that range. And then we've since been trading lower. Now, also just looking from the right side, this black dotted line was the midpoint of this up close candle, which was to me a bearish order block, the last line of defense for all of these four candles that were behaving as an order block together. But so we rejected that midpoint, right, 2 weeks ago, but we failed to take out this low, leaving those relatively equal lows on the daily. I was anticipating us to take out last week, but we didn't. We find ourselves back up here on the high end of the range, right? Because ultimately from the daily, just looks like a very volatile consolidation to me, not really giving any clear directional, movement. And so what I'm seeing as far as the dollar is concerned early this week is, I mean, currently right now, right, just for today, there's going to be a range in between this high here and this low that just rejected from this old level of resistance now turning potentially into support. So without any sort of displacement lower through this level, also I'm seeing this inefficiency here with this down close candle. So I really need to see dollar show willingness to get below these lows, to be completely honest, before I'm able to basically accept that, okay, hey, we're turning around here and we're going to see lower prices on the dollar more than likely. Currently, not much of a bias considering how last week it ultimately just showed itself that it's still within a range. And on my video from my review and outlook of last week, this will also be something that you should remember. I went to the daily chart of the dollar and all the indices as well as gold and showed how, as far as April high to low range is concerned, we're still within that range on all of those assets. But so, like I said, just short and simple, this is going to be the only talking portion of this video. The next part, I'm going to be just kind of doing my markups and allowing you to kind of tune in on that. And I may possibly slide over my MT5 screen and show you just how Magic Keys works as well for this video. But we'll see if I find a setup first for that. All right, so good news, believers. I was able to find the setup. And so it was in total about a 3 hour morning on the charts for me, about 30 minutes waiting for the setup, and then the other 2.5 hours pretty much managing and qualifying different levels to support the trade idea. So what you're seeing here is just me getting set up with
the dollar chart, and before that it was the E-mini S&P. Just getting ready for my New York session model, getting all of the main areas pretty much just marked up on my charts so that I can see them without having to really put too much effort into it, right? I want to have certain things marked up on a chart just so that I'm able to easily see, okay, cool, did price trade to that level? How did it respond when it got there? So this 15-minute inefficiency, we see price is trading down towards that on the E-mini S&P. And so what I'm thinking here is, obviously, like I just said, how does it respond to this price range? Does it offer support? And do I see price start to trade higher from that? Because ultimately, in my outlook for the week, I stated that I am still bullish indices, bearish dollar. Ultimately, everything's still in a range though on the daily. So I'm being very picky about what is going to be qualified as a high probability trade setup. And so also one thing I want to point out is, as you can see from just this current price fractal, the market for the E-mini S&P has been trading lower, right, for about maybe like 2 hours or so at this point. And so what I'm really just trying to qualify, of course, is how does it respond at the levels I have marked up. So you saw the M15 area of inefficiency. We've traded through that, but this is the 5 minute, so I'm waiting for that 15-minute candle to close. And then that orange line was another area of interest. So we've now traded to and through that level, but rejected. And so I'm just, again, qualifying, right? You see, okay, got that 15-minute close. So then I go ahead and I change the shade of that rectangle to brown, just letting me know that it's a potential inversion level, that if price trades back up to it, it may act as resistance. And the pink line that you see up there that I drew, that was just on the 5 minute, that swing high. Because before I'm to take a buy entry, I need to see a short term high like that swing high that was created up there be taken out first. And so that's why you see that that's marked up there. So just, switching time frames, adding another relevant level that I'll be watching a reaction, since price definitely seems like it's running on sell side for the early portion of the morning. And for someone who's watched the outlook and the review of last week, this blue shaded area that we're inside of is that blue shaded area from the daily chart, that inefficiency that offered support at the end of last week. That is the same level that this larger blue shaded area. That's exactly what that is. So price is now traded to, right, that purple line that I added, and I'm seeing, okay, there's some sensitivity at that level, right? Price has bounced higher from there. You can also see I've added an additional pink line just to be aware of the other swing high on the 5 minute chart, right? One of those swing highs would need to be broken before I'm to start to look to take this reversal trade back higher. Also, you see there is an inefficiency on the 5 minute that could act as resistance. So of course, it lining up with that orange level, which was of interest to me, makes it even more powerful in my opinion. So very interested to see how price responds there. We've now traded below that M15 sell side that was marked up on E-mini S&P when I was first just getting set up right for my New York session model. And now I'm very interested to see what type of price action I get on the smaller time frames around this area if I can get what I'm looking for, which is a break of a short-term high, leaving an imbalance ideally, which could then offer support for me to take a buy. So this is still the 5 minute. What I'm thinking at this exact moment right here, I like that small bodied candle just printed, and that there is the potential for that candle to be engulfed, meaning that this candle that's printing now, how it's traded below the low of that candle, I want to see if it has the willingness to trade above the high, which is what's considered an engulfing candle or an outside bar. To me, when it's traded down into this pool of sell side liquidity, that's a very powerful signal to see at that particular time, because of the fact that, like I said, it's just traded into a pool of sell side liquidity. So now you see I'm getting a little crafty. I've gone to the 1 minute and I'm noticing that inefficiency that could have acted as resistance, but instead price blew right through it. And so now I'm starting to get ready to engage the marketplace. I'm seeing that it's ready to start trading higher. I'm setting up my risk reward tools just for all of the different levels that could provide resistance to stop price from getting to my ultimate TP. So as you can see labeled there, I have an area for first partial, which was that initial 5 minute swing high, second partial, and then I have a TP for the full close at the top of that yellow shaded area. So at this point on the 5 minute, that brown line that I had drew, that level was ultimately going to be my entry. So I have a lot of entry signals in my tool bag. I've been collecting them for years now. And some I like more than others. But the biggest thing is understanding, where do I believe price is going? Why do I believe it's going there? And when do I think it'll start to go there? So all of those things start to line up. I've taken the entry at that brown line, like I mentioned, so that where that tool, the gray lower half or the gray lower portion of those risk reward tools, that where it meets the white, right there is the entry. The low of that gray shaded area is where I'm putting what's called my stop loss at, which is basically just going to protect me from losing more than I need to, because I know that if it goes down there, then my idea is invalidated. And so at this point, it's traded above that 5 minute inefficiency that I was saying, right? Could offer resistance. So it traded through that 1 minute one as well as the 5 minute at this point. So my eyes are on that swing high on the 5 minute. How does price trade once it gets to that level? So first tap, seeing how their sensitivity, right? Look at price start to retreat from that level, but not doing anything crazy as far as any large green or down closed candles from that reaction. Looks like price is still showing a willingness to engage that level and possibly even higher, as it has now, in my opinion, shifted from sell side delivery to now buy side delivery, meaning that it should be going to higher prices above old highs and also to old levels of inefficiency that were sell side imbalances but inefficiently traded on the buy side. So right there was a little flash of the MetaTrader 5, which I did say I may slide over. So I did slide that into the field of view so that you can see what's going on in the demo account that I have my magic keys connected to. And you see that that entry on there is the exact same area that the entry that I'm showing you on the TradingView charts is. The only difference you'll notice if you've paused the video is that the price levels won't be quite the same. That's because every single broker or liquidity provider will typically have their own numbers. My biggest concern is about price action, right? How is each individual candle responding to certain levels? in the market. The actual price point is irrelevant to me because if one of them is in the 4,000s and even if one was in the 3,000s, as long as it's moving the same distance and all the candles are printing the same, meaning like, for example, we have that green candle that just printed and closed, right? And now we have this black candle currently printing. As long as the MT5 chart is identical to this price action, I do not care what those numbers are because at the end of the day, what I've learned is that again, that all of those brokers and liquidity providers will have their own, basically their own numbers at the end of the day, and there's nothing that I can do about that, nothing that you can do about that. So it is what it is. Just had to learn how to adapt and how to really just focus on, the structure of the candles rather than the actual price points. There's nothing really too confusing about that, to be honest. You just gotta, you know, accept reality and then adapt. But what you see though is so that first candle close above that initial, right, that pink level, which was that swing high on a 5 minute. As soon as we get a candle close above that, we get that sharp reaction lower with that down close candle. We ended up actually retesting that old M5 inefficiency that could have offered resistance, but it tapped it as support, literally tapped right on the high of it. And what's holding price back right now is that initial M15 inefficiency that I have marked up. Although it never offers support, any real support for price, I do see now that it is giving price a hard time as far as it is not allowing it to pass through it right now. And so just to talk numbers really quick, since there's a little bit of a second here, a few seconds here to observe the balance, the equity, look at the position, right, the price, the volume, things like that, the time, all of that. And as you can see, those partial levels marked up, those are all thanks to magic keys being able to set partial TPs on the way towards a full close TP, just because of the fact that I've learned that I'm not always going to get my full target, and sometimes greed can kick in, right? Where it's like I see this old high or this old low that I want price to get to, so my want sometimes overrules what makes sense, and then I'll have my take profit or TP at that level, and if it doesn't get there, oftentimes I'd either have a break even trade, meaning I made no money, it came back to my entry, and I had it protected with my stop loss, or I'll lose money because price has traded back to and beyond my entry, and now is looking like, wow, maybe I should have took the reverse move instead of trying to hold on for dear life for this to get to that final target. So as you can see, if you look at the left side at the top, it says TP over there, but then on the right, but lower than that red line, you see the two pink lines, number one partial TP, number two partial TP. So above those highs there, that's actually like that initial swing high in the 5 minute. So I wanted to make sure that I paid myself at that level because that was the first level that I was watching to see, okay, can price break through that level and leave me an entry signal once it does so. So since we traded so low beyond that into a discount, and now we're starting to trade higher back towards that level, and because also that's about 3 times, right, what that risk range was, I want to make sure that I'm at least paying myself for playing today, right? And so at that level, I'm going to take my first partial, meaning close some of the position, bank some profit, and then slide my stop loss up to break even so that now I'm in a risk-free trade. but also if I've collected some profit, just in case it does come all the way back down to my entry and close me out at break even, I've at least, like I said, banked some profits for my time, energy, and effort. But also, again, demo account, right? And so the point here is speaking about percentages, because when I first got into this business, I was told by the educators who I was initially learning from to think from a percentage standpoint, but some of the opportunities that I know of now, as far as being able to get access to funding, I was not aware of. And so, using what little I had and being able to conceptualize it from a percentage, viewpoint was very difficult, just being honest, right? And so I got caught up in thinking about the dollar amounts. Now, with more capital, though, for example, like a $5,000 account, 1% of that is $50. So any multiple of 50 then becomes, right, an added percentage point. And so the name of the game is preserve capital and small growth, right? And so just to talk about what I just put in those text boxes or text bubbles up there, as you can see, we're still having difficulty getting through that M15 inefficiency. So I've mentioned before about three drives pattern, meaning that price has traded into a particular, area or pool of liquidity, and it's run the highs or the lows three different times. And so that third high or low, would I demand price to absolutely smoke that level for me to continue to have the same bias that I had prior to. And so this video is actually going to be ended soon. Um, it did end up reaching all of my levels, my partials, and my final TP, but there was too much video at that point already. We're talking about 3 hours of video that I had to, trim and speed up. But if you're interested in, I guess, proof, if you will, just, leave it in the comments, and I have no problem, connecting with some of y'all and possibly seeing if we can get some more engagement going in the channel. So shout out to the believers. I'll holler at y'all later. Peace.